Hi everyone, welcome back to the channel. It's Jonathan here. In today's video I wanted to bring you an update on Peabody Energy BTU. Peabody surprised me when they managed to maintain their relatively high stock price over the last few weeks, and I want to talk to you about my outlook, if I think they'll be able to maintain it going forward or not. I will use the perspective of an interest investor and ask the questions related to the company, to the industry, and to the share price itself to find out if I would like to invest or not. Join me today in the journey as I walk through the different aspects and determine if I believe that Peabody will maintain their rapid ascension. But first, I'd like to thank you for joining me. I'm Jonathan. I bring you the market news and context so that you can save time, trade or invest your way, and make money. If you're new to the channel or have not yet subscribed, please go ahead and subscribe now and activate the notification bell so that you'll be notified when I release new content. If you are enjoying the content, please leave me a like rating so that the YouTube algorithm knows that this video should go out to a larger audience. That's enough about me. Let's move on to Peabody Energy and the company itself. Peabody states on their website that they are a leading producer of coal in the United States, and they provide the baseline power so that the country and society can function. Peabody operates in the United States and in Australia, with mining operations in both countries. From a financial performance perspective, the story gets a little dark as we look at the balance sheet and the income statement. From a balance sheet perspective, there are two main categories that are worrying, or at least worthy of noting. First, the total assets has been declining precipitously over the last few years. Second, the equity portion of the balance sheet has also been declining rapidly. Moving to the income statement perspective, revenue has been declining rapidly in conjunction with the asset reduction. The last point I have about the company itself is from their investor center. Here hidden down in the bottom, investing wisely and returning cash flow to shareholders. This is the strategy mission of Peabody BTU. If we look more closely, we can see that the last dividend from Peabody is not in 2021. It's not in 2020. It's all the way back here in 2019. Peabody has not been returning cash to their shareholders. Instead, they've been holding on to it, trying to survive the pandemic. Bringing this focus on the company together, here's what I think. I think that the financial performance, I think that the industry focus, I think that the focus on returning cash flow to investors is not a great sign for my investment. I don't feel like they're doing what they say they do. They sell coal, yes, but they don't seem to return the cash to me, the investor, and that's what I want. This will lead me to move from the company to the industry to see what's going on there. The first aspect of the industry I would like to examine is coal production in the US over the last 5 years. Here we see a negative trend. We see that coal production has been declining from 2015 to 2020. And in 2021, we don't have full year data yet, but what we can see is the first quarter is also declining. This is a negative sign. Production in terms of tons of coal produced is declining, but the price per ton seems to be increasing since 2016. So this is positive for profit margins. At least that is my expectation at this point. One reason that I've been able to find and to validate for this increased price is that the price of natural gas, which is basically a direct substitute for coal, has been precipitously increasing. It had a valley on its 5-year chart, and then in the last 1 year, it has increased over 100%, and this has caused a lot of users of natural gas to look at least using coal instead. The next aspect of the industry of the larger focus is other companies. Let's take a look at what I found when I looked up the largest coal producers in the US. What I found was that in the top 20, there were 9 that entered, and most of them have exited, but they have all entered Chapter 11 bankruptcy over the last 5 to 6 years. That is a lot of bankruptcy in an industry, especially for the industry leaders, the ones you would expect to be making money and expect to be returning cash to shareholders. The problem with the bankruptcy is that all the shareholder value was wiped out going through that Chapter 11. The company survived, but as a shareholder, they didn't maintain anything. To summarize the industry perspective, we see that in the short run, the price of coal has been increasing because the price of natural gas has been increasing. meaning that the profitability or potential profitability of coal producers seems relatively high. The second point here is that in the long run, coal does not have such a rosy future. It's got a pretty black and bleak future because it is expected that over the coming years, the use of coal will be phased out in favor of more sustainable, more planet-friendly sources of energy. Therefore, in the long run, the coal industry as it is today is very unlikely to survive. The focus on Chapter 11 as a survival mechanism shows that when things go wrong in the coal industry, it goes wrong as a group. Everybody has bad years together, and when coal is being phased out, it seems like the entire industry is going to have bad years, leading to consolidation or mass bankruptcies. Short term, it seems like this could work out. Long term, Next, I want to look at some price ideas and see if the price ideas that I have are worth investing at, or if there's anything to support my case, or if it's time to move on. The first price idea or price question I have is, what is the book value versus the market capitalization? Does this support investment? The book value is around 965 million, and the market capitalization is around 981 million at the time of this recording. This means to me it is fairly well valued, and that's actually different than what it has been before, because before the net asset value has been much higher compared to the market capitalization. That would lead me to first say this is either fairly valued or overvalued, especially in comparison to itself. Next, I want to look at some technical factors that may influence the decision to invest or not to invest. Looking at the chart, I draw a conclusion that there's a $7 support level here because it has been tested once or twice. There's an additional support level at 5, which is obviously much lower, significantly lower on a percentage basis, but this one looks even stronger because it had functioned as resistance previously and now as support. From a technical perspective, I have reasonable confidence that the price should maintain in the general region where it is. The macro factors affecting the price of this company are split into short-term and long-term factors. In the short term, we have factors such as natural gas prices being very high, causing the price of coal to go up and demand for coal to go up. This is positive and leads me to think that Peabody will be able to perform in the short term. Long term, on the other hand, it is different. Long term, I see the industry as a fading industry, somewhere where you don't want to be stuck in long term. But what does that mean? There's another factor I'd like to bring into the situation right now to help understand more clearly. According to Yahoo Finance, 78% or more than 78% of the available float is owned by institutions who they can typically be thought of as stable investors looking for a longer term perspective. Based on the information that I have and what I've found out, it seems to me that Peabody will be focusing on delivering their strategic point that I referenced at the beginning of returning cash to shareholders, especially since they are increasing their profitability with the higher prices of coal. I think they'll be doing this in the short run, so as a short-term or medium-term investor, it is probably possible to get the money back. The problem is, in the long run, if you don't get out soon enough, it will likely end up back in bankruptcy or simply just a very, very low stock price. There it is. I've looked at the company, I've looked at the industry, and I've looked at the price itself. I find that investment is not wise for me. I find that in the short term, it is likely that investors will get their money back. I just don't know how. In the long term, I don't think Peabody will be able to maintain such a high valuation, given that the coal industry will likely fall off dramatically in the coming years. That's what I think. What do you think? Leave me a comment down below. That's all I have for today. I'll see you next time.